All right, so what I'm going to show you guys today, and it's a very simple way to execute trades, buys and sells, right? And it goes to show though that a strategy is very simple to come by once you have put in the work to identify a particular pattern based on a number of variables, whatever the case may be. But we found that, right. So that's kind of it's one of my strategies when I'm trading, right. I feel like myself, I like to be an adaptive trader, so I have different strategies that can adapt to different market environments, we'll say. And so, but this strategy, what I'm going to show you today, just one piece of it, is the Ichimoku Cloud, and just how simple it is, and it really works on a number of different time frames, right? So I couldn't just pinpoint it to even one time frame because I've seen this do the same things on multiple time frames. This Ichimoku Cloud, I'm gonna show you how to use it, just real quick, and then I'm gonna actually give you the data behind the indicators, and ultimately why it matters when we start to piece the puzzle together. I love referring to puzzles. So all right, so right here I got a completely naked chart. I'm on USD JPY. I did that on my last video. Let's do another pair. Let's do gold let's do gold futures. So this is gold futures. I like to trade gold futures just because I can manipulate my risk a little more than I can with the trading XAU USD. So just for my current account size, right, just the money I'm comfortable trading with, right, I like the gold futures. But what we're gonna do is we're gonna start on the 15-minute time frame, and I'm gonna add one indicator to the chart right now. And it's going to be the Ichimoku Cloud, right? So I already have it favorited, but you can just type in ICHI and it should pop up if you're, up here in the indicators. But then I have some settings edited, so I have some things turned off. So I only have the lagging span and the leading span B. All the lagging span does, it mirrors price. So it does, this line right here does exactly what the current price is doing. It does exactly the same thing as what current price is doing. But the way that it's plotted on the chart is 26 periods. So in this case, 26 15-minute candlesticks in the past, right? So this is current price. And if we counted 26, let's do it. That this line is going to be on the 26 candle. Ready?
So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25,
26. Okay, cool. See that? I might even miscounted, so I might even started it a little too late, but literally it's this candle, 26 candles. I can assure you it's 26 candles. That's where that is right now. And so why does that matter? That matters because I've identified, and we've identified over a long period of time, there's a higher probability of the way that this line here reacts with price, right, and where it is, right. And so in this case, I wouldn't, even though we were in this downtrend, I wouldn't like sells because this line is now messing around within price, right. I like when it's like this. When it's trending, let me pull out this, right? When it's trending down like this, not in here. Every time you see it in here, that normally signals some type of consolidation or accumulation. And what also am I looking at right here? If you view the last video, decision-making level, right? So, and once I start seeing certain things happen, certain confluences, confirmations, signals, whatever terminology you want to use at my decision-making levels, like I hold my decision-making levels to the highest standard because over a long period of time on every single time frame, no matter the market, no matter the event, no matter anything, these are super consistent, right? And what do they tell me? They just tell me that a certain area has a lot of volatility, it has a lot of decision-making, right? And those are where the decisions are made, right? And it's just not a video on decision making level, so I'm not even gonna get into it. But it was just the fact that this line, right, is now within that area, and so we would be wanting, we would be waiting for this line to break below whatever wherever the low is. So like it'll probably be somewhere around this area when this line is breaking below price if we go down, right? And I just know that because like I'm not going to say I know that, but that is usually how it looks, right? And so without seeing it, there's no way to know where this, it could not cross over, and it could just, price could just keep moving upwards, right? And then this line is just going to keep doing the same thing, right? This line is just going to keep moving upwards as well. Because what does it measure? What price is doing. It's just 26 periods in the past, right? And then so once we get our confirmation, right? So that's the first thing you need to remember. And the one thing you need to remember about this line is we want it below the low. So like I'll show you an example right here. Watch. Well, let's just go to this move. This is the 15 minute, right? Like I said, you can do this on any time frame you want. This is the 15 minute, right? And so just focusing on this line, this is not what we want because it's not below the low, right? So to prevent a false breakout or getting maybe stopped out or just being the liquidity, I wouldn't take that trade because we're not below the low, right? And so when would I have taken that trade? Boom. Because now we're below the low, right? And we take that trade, entry, stop at this span B, and I'm going to get into that next, but that's going to be the stop at span B. And then I'm going to take it for, I like to do a 1.5 to 1 because I like to say 1 to 1 and then some, because it's like I don't want to be greedy. I'm playing around with a few different things right now just to give myself a little bit more freedom, but freedom within boundaries. But what I've seen super consistent as well is the 1.5 to 1. You know, that's just what I've seen. So you can play around with it 1 to 1. You can do a 2 to 1, whatever the case may be. But yeah. So like I said, for the sake of this video, I just did a 1.5 to 1. Right, so let's just see how it ends up just off of us looking at that confirmation. And boom. 53 points, right? I normally trade 2 contracts on that. So yeah, that'd have been risking 600, 700 to get 1,000, right? Which I'm personally cool with that. Especially something that I have seen happen over a high probability. So as long as it's within my risk, like 600 is personally not within my risk with my current funded account. So I wouldn't have liked that. I would have taken something differently in terms of having my risk at a different spot. You know, but that is this example is purely to show you how simple the execution was and what we were looking for. And so now I'm gonna show you right, so that's the entry. So what are the entry rules, Marcus? What are the entry rules? The entry rules are, we need these candlesticks. So let's go back a little bit because I'm gonna go back into this is the entry point, right? We need these candlesticks below this line, this blue line, which is the lead span B, which I'm going to get into here in a second of the data of why it's important. We need the candlestick below that line, the current price. We need this line also below that. And then we need it below the low, right? For us to entry, so that this would be a sell, right? And then when do we exit? We exit when this line right here, this lagging span, crossing us back over this lead span B, this blue line here. And so what's so important about this blue line here? This blue line is essentially it's the average of price, but it's over a 52 period time frame, right? And so what that means is I believe it's 52 periods. Lead span B, yeah, it's 52 periods. So it's like 15 times 52, right? Let's do that math real quick. 15 times 52 is 780. Why is that important, Marcus? Because that's 13 hours. So that's basically like a half a day, right? Half the market, right? The market's open about 24, 23 hours a day, right? And so it's about half of that, little more. And that's all that's what that's telling us. So whenever we get across above or below that, combined with what our lagging span is saying, and then there's other things that we can include. But as I showed you in that previous example, which I'm gonna show you a handful right here after I explain this, we really only need these to look at this, right? And so that's why this is so important, because it essentially acts as a decision making level. And another funny thing about that is, more often than not, can I find a decision making level at this area, right? The same area that we have this 52 period average of price at. I can usually find a decision making level somewhere, and I already see one, right? Like that's boom, right there. And then all in this area, I see them right here. But that's just, those are just little, like just little signals that go off in terms of where price, like where price is right now. Is it in an area where we're already in a trend, and I may need to wait for the correction, or whatever the case may be. Like, you know what I'm saying? It lets me identify like the true nature of where price is. Are buyers currently winning, or are sellers currently winning, right? Or is it kind of a back and forth? We haven't really made that decision yet, right? And so that would have been beautiful. That would have been beautiful right there. And so let's take a look at another example. So that would happen. And so now we would exit this trade. Like, look at this. So I'll just show you. We would exit that trade. So this is the good thing about it too. This is what I like about it too, right? This is our entry, and this is my risk. This is my initial risk. And so this is one thing I'll say. If I love a trade and I predefine the risk and I accept the risk, I don't care about the outcome. Even if I am risking over leveraging, we'll say, when I'm risking too much on my account, because I'm personally comfortable taking those excess risks, because everything is just a lesson, right? So, which I do understand, it's also not proper risk management to risk 10% of your account, 20% of your account, 50% of your account. But like I said, I am comfortable as a trader, and as understanding the tool that money is, to be able to take those risks if it presents itself. I don't take them often, but if it presents itself, especially on like the funded account level, if it's something that I'm leveraging somebody else's capital, which I would be doing on this futures account. But that was just a little side note. And so that's 34 points, right? But our exit is when, let's say we don't exit there. We just want to run the profit. Our exit is when this line crosses back above that line. When our white line, don't forget our lagging line right here, crosses above this line, lead span B, we exit. And that's actually where price currently is right now. So we would still be in this trade. We had an opportunity to get 118 points, right? We would have entered this trade on Friday, the 25th, held it through market close, market open, Monday, April 7th, and we'd still be in this trade. And from the looks of it, right, if we just look at it, even if we moved our stop loss, right, to this area, to where we can just step away from this trade. If we just think about what we're waiting for to exit, it's this line to cross this line. That's our exit confirmation. And based on where this line is right now, it's not like it can just shoot up. Like it's if it continues to go up, this portion's still going to be here, which means this line is now now it'll be closer to crossing it. Does that make sense? You follow me on that? And so what I'm saying is we can have the comfort knowing like, wow, I'm okay if price moves corrects all the way back to like this level. Cause no matter what, that's 59 points. You see what I'm saying? Because if it does cross back to this level, that's going to be my exit confirmation, and we're in infinite profit, right? So then I would my stop wouldn't be up here anymore. I would then slide my stop basically to where my take profit is wherever my take profit would be, but my stop loss, it's something that you usually put behind your entry, right? So if you're buying, it's usually something you put under your entry, right? So buy, this is the stop loss, right? When we're selling, this is the stop loss. And so what would happen is I would basically put my stop loss in a profit. So no matter what, I'm good. No matter what, I'm good, right? And so let me get another example in here. Right? And so look, so here's another one, right? If we go towards this area. So what are the two things we look for? We want this line to be below this one. And I'm going to stop saying line, so I want you guys to remember the two names for them. Lagging span, that's my white line. Lagging span. What is that? What is something lagging? It's behind. Okay? Lagging span. Behind price. Okay? Mirroring price, doing exactly what price is doing, but behind it. Okay? And then we have lead span B. Lead span B is just considered like a decision-making level. Just that. If you watch the video on my decision-making levels and the power of them, magnetics, the magnet and force field like nature of those decision-making levels, similar characteristic when it comes to lead span B, right? So those are the two lagging span, lead span B. So we have this lagging span below lead span B. That's what we're looking for if we're selling. And then we also need price below lead span B, okay? And then we need this below the low, which it is, right? Like the last low, it would probably be over here, or actually this one right here, and it's crossed that, right? And so entry there, stop loss at that lead span B, 1.5 to 1, and pretty sure I saw, yeah. So, because we obviously saw before I reversed it that it was going to hit, because I'm looking for clear examples to show you how clean it is. And honestly, after you already hit your profit, this is why if it were me, I've grown more to the fact of depending on, there's so many other things that I'm considering. This is the freedom that I was talking about earlier within boundaries, just based on like fundamentals and the different market sessions. I want to be able to utilize. I want to be able to execute on the different opportunities, right? And so the 1.5 to 1, like I said, it is super consistent. Re-entries, those are just going to be like, you're not going to want to re-enter and do the same type of stop. Only based on the current market conditions would I really consider a re-entry, because I'm okay with missing out on however many points, honestly, to prevent from being in a point where price reverses on me the moment I get in, right? And so this is where we'd have got out of this trade if it was a 1.5 to 1. And so let's see where it moves to, right? So then immediately, right? Like literally, look at that. Immediately after, so I would have missed out on 40 points, but immediately after, it took back everything, right? And so that's why it's just, the take profit is nice, just because you collect it, right? And it's just a consistent way to know that you're gonna allow yourself to come out of that trade. Now it's all about risk management. That's what it is to me. Like, I've been playing around with trades where I'm going for 4 to 1s and 3 to 1s, because my risk is proper, right? And I want to give myself that freedom, and logging it, right? So I'm able to really have a backlog of data on how I'm performing, right? And then aligning that with current market conditions and so many other things, that data can be pulled from just by logging it, right? And freaking with AI, it makes it, even all the more helpful. But um, the point is to take profit, put a take profit, and have an area that you're accepting, because you're not only, because the thing is, we want to predefine and accept our risk when it's on a stop loss scale, but we also want to predefine and accept our profit, because that's how we prevent ourselves from being greedy, right? Could you have re-entered on this? Yeah, absolutely. But make sure your risk is proper. Make sure you're not giving half of what you just got back. You know what I'm saying? There's certain ways. There's so many different ways we can play that. And maybe that's another. That's definitely a live session. I do that, and me and Q do that risk, like managing our risk in a live session very well. Um, in live time, right? Because I feel differently when I'm looking at, of course, certain things. We got news going. We got whatever. You just have to join to see. But that's another example, right? That's another example. Let's look at another, like, and you're probably like, wow, it's that easy. Because look at this one. Look at this one we're looking at. Look at this one we're looking at. What do we need to enter? So let's say we were all the way down here. And yes, there are going to be times where you lose. Of course, I'm not going to tell you this is perfect, but if you withstand the amount of times you lose with proper risk, you just literally use this one confirmation, you run into stuff like this. This is on the 15-minute. Now you would have had to hold this from Wednesday, March 26th to April 1st, but you're talking over, what is that? 137 pips or points, excuse me. That's a big chunk of change right there. We'll say that's definitely a big chunk of change right there. Um, I don't even know how much would that. I don't even know how much that would be. I can't even see it right now. I'm actually curious. Let's look, because you can. So this is roughly the entry. Nope, it was even before that. And you're probably like, well, of course you would enter there because you know it's gonna go up. I'm strictly just going off of the confirmation that I just showed you guys. So even though right here you would have taken a buy, right, but then it would have crossed right back, so you would have got stopped out, right, and then you would have waited, right, probably wouldn't have taken a buy when it crossed there, maybe would have taken a sell, and then you would have got stopped out. Then you would have waited, and now you would be taking a buy, right? And this is all speculation, of course, but you guys are seeing this one confirmation no matter the times that it loses or whatnot, because we can get into market sessions and we can get into, you know key levels, right? And having that stuff marked up and understanding what market sessions provide, more of manipulation or accumulation, or where the moves happen, we can say. But this is just literally to show you the simplistic way to use this cloud, and how it's honestly, you know just a simple way to clear price action, right? It just brings clarity to price action, because it you don't get lost when it's all in this type of stuff. You don't care when it looks like this, right? You like once you start to see it, guys, I promise you, it just looks different, right? But let's see how long this was. Let's see how much this was. Hold on, let me do that again. I know what I did, but this is because I would take two contracts. I just want to see if I would have taken that, because I mean, I definitely was trading at that time, and even myself, like, I tend to sometimes overcomplicate, and damn, I wish I can just get back to the basics of my strategy, right? But I like to experiment, because it's just like a puzzle to me, um, and but like well, the proof is in the freaking pudding. Like this thing is money, right? You're talking the risk was what, $60 it said? Right below this line here, $78, and boom. That's where you would have taken profit. Right there. 2,400 on that. Just off of that one, like you can't convince me that some like that 80% of people cannot look for that and just take that. And that's on the 15-minute time frame, right? And so man, that's super clean. But let's even look at it on like a 5 minute, and I'll go to a different. Let's go to a forex pair. Let's go to GJ, GBP JPY, GBP JPY. I've been liking this one too, trading this one a little bit more, but I obviously already see one right here in terms of a move that could have been. We would have waited for the break around this level, right? And if that is within our risk, 1.5 to 1, that'd have been money. Right? 43 pips. Boom. Execute on that. Now would we have missed out on an additional 30 pips, half the move? Yep. But who cares? You know what I'm saying? Um, would have got stopped out if we gotten a buy here, because then we crossed back over. But then we would have gotten another buy here, and we would be in that buy, right? And like I said, I truly believe like that you can use that, and you'll be fine. You'll be fine, and you mark up key levels, because key levels they play an important role, like understanding where the decisions are being made. That's why I refer to them as decision making levels. As long as you understand where the decisions are being made, you know you will see. I'm not gonna say because if you're new, you're not gonna know until you experience it or you learn it. So the other way you'll do from learning it, besides me saying it, is when you go through it and you try to act against it. Because I even too act against things that I've seen happen over and over again. Because that's just the stubborn nature and and me wanting to see it work out. But um, that's why I trust those decision making levels so much, and because over a long period of time, I've seen what they've done. Right, I've seen them reject price, or I've seen them support a certain area or prevent an area from getting broken through. You know what I'm saying? So why am I going to trade during that area? Let me just wait till it moves away from that area. You know what I'm saying? And so, I mean, just a quick recap on what we've gone through so far. Just the two, and I'll just do this. I'll just do this real quick. We're looking for two confirmations, and literally, I truly believe I could have my chart like this and trade, but like, that's nah, I'm not doing that. I'm not doing that. But hey, you kind of could. You kind of could, right? If you literally just trade it off of each break, right, and then wait for it, and then set, like, even right here, right? Look at this. So that's probably somewhere. Boom. We say that's the entry. Oops. We say that's the entry. That's the stop. Like, that's light. So that stop is light. Let's just do like a low. So I can do a 1.5 to 1. 30 pip stop. That's straight. Ooh, see that? It barely did not um hit the TP, right? But you see it hit the stop loss, because our exit would be when it closes below, right? The reason why I didn't do it at the beginning was to allow myself to have that risk to reward. And 30 pips, I'm okay risking 30 pips. I'm not gonna say never, I try not to risk more than 50, right? 50 is like, unless I really see the reward potential, I won't risk more than 50, right? So 30, that's straight to give me that 1.5 to 1. I go, risk 30 to get 50, but you see we had closed out and I would have, lost 12. But big whoop. Um, but yeah, the only thing we're looking for, you see another, big move right here, is when this line is below this line. And I'm not going to say line again. There I go. I was saying line again. We want to say lagging span and lead span B. The lagging span is important because it's just it's quicker for you to realize once we have the candlesticks up there, like lagging span. Oh, that's the one that's behind price, because that's what lagging is. We won't ever get it confused, right? And there's honestly nothing to really confuse, because the only thing that you're looking for is the lagging span to cross below price and below the candlestick lows to enter a sell, right? So this would have been a beautiful sell right here. And then to exit that sell that you're in, you're waiting for it to cross back above, right? So that trade right there, GBP, JPY, that would have been a nice 161 pips, roughly 150, right? Over the course of Friday to Sunday night, right? This is the 15. Oh, this is the 5 minute time frame, actually. This is the 5 minute, right? And yeah, we can get into taking partials, and there's so many other things that I can get into um, in terms of optimizing, but it's really just adapting, refining, reflecting, right, and just constantly looking at the data, right? I don't think you can look at enough charts, like, because it's not really about like just looking at charts. It's just getting familiar with the price action, because no one price action is the same. I don't believe that. We just gotta continuously drill the mindset of everything in the market is completely random and unpredictable, right? Every unique move in the market is the first time that it's ever happened the way that it's happening, and the more that we can understand that, the more we can just refer to things in a real, just in a certain way, right? To where we don't get. I try to stay far away from getting like too biased, right? Um, and so sometimes yeah, I'm not even gonna go down that rabbit hole. I'm not gonna, but we see the consistency of that. That's 5 minute chart right there. There would have been another one right here, right? We'd have closed out right over in this area, right? Just super easy, just super easy. Just super easy. And then there's something else. The MACD. So in the description, right, is gonna be a ebook on the cloud a little bit more, and the MACD. Like, go get that. It's literally free. It's in our community. It's completely free. I think you just need to you're like sign up with your email. But it's free. You can access it. You can download it. It's yours to keep and use, but it goes over that. So this combined with the MACD, that is what we like to refer to our VXT strategy. That combined with the MACD, because it's this is giving us an execution type of confirmation, and the MACD is giving us a confirmation, because it's going to measure the momentum and the volume, and based on a few components of that MACD, we've seen all of those confirmations. So the three that I talked about today are really two, which is just this line, because anytime this line is below price or above price, it's gonna be above this, and yeah, we can say that. And so anytime it's below the low, it's gonna be above. As long as price is below here, you know what I'm saying? Think of this as like the force field. We want price below this. We want this line below everything, and we want price below as well, right? So let me run that back just one last time, right? We want this line when we're selling, this lagging line below the blue line, the lead span B. It's not going to be blue the first time you put the cloud on your chart, if it's the first time, because I've edited mine. So look for lagging span, which is mine is white. Look for lead span B, mine is blue, and then we need price below that, and then we're good. And then, like I said, once you see the MACD and you have that volume confirmation, that's even just more of a confirmation of something that's happened over a large amount of probability, like a large amount of trades, right? Like when I backtest, like this is something you can backtest and see. Okay, over 100 trades, I've seen it happen 50 times, right? And those 50 times, the profit is far greater than when those other 50 times when when it doesn't work out, right? It's just data that you can get, very very simple and very easy. And so like it's nothing that we're hiding or anything like that. Like I definitely know there's times that you'll lose, and there's other factors of and it's all up to you on what trades you take. Like maybe you don't get this trade from the bottom, right? But you get it from up here, right? Or you get it from up here. It's still the same. You're still looking for the same thing. You want price. So this right here is just like textbook right here. See how beautiful this is? Just this line trending above price trending above this line, right? And I can bet you if I pulled up the MACD, which I'll just show you the MACD real quick, and then we'll wrap it up. But if I pull up the MACD right over in this area, look, beautiful. That's so beautiful. Look, we get the green dot right on that volume starting to pick up. This is would have been the entry. It would have been this candle right here. Because I would want it to wait for it to break this line, to break the high, which it did on this candle, right? It did on this candle, and we can get in there real close, but it did on this candle. It's above the high. I'm good. Let's go. Right? That would have been our buy, and we can even do this. Buy. They got it in freaking yen. Stop loss, low, 1.5 to 1, about 1,500. Let's see what happened with that one. And yeah, well, I saw that. It's going to hit it. And that's 1.5 to 1. Okay. Spikes above. And does it keep going up some more? Yeah. So how many pips did we just lose out on right there? What, 40? And then we get our exit around that area if we were just waiting for this to then cross back below, right? And then, of course, in my opinion, this is like you shouldn't be trading sporadically and just every time you see it. So like in this case, right? If you took this buy and you exited this trade and you waited for it to cross over here, you shouldn't be taking a sell the next time you can, in my opinion. Because like I said, then we have to account for key levels. We have to account for market sessions and it's not just gonna go up and down and up and down. Like the market does go up and down and feel, imbalance and price action, but it's not going to be a zigzag like that, right? If it's going to go down, it's going to accumulate. It's not just going to flip over like that. And you know what I'm saying? So I don't want you guys just thinking I'm saying, every time it flips and flips, because the trade you do take, that might be the only trade you need for that day. Like that's just being honest. And if you take an L, then you give yourself another opportunity to take a trade. I don't like to take more than 3 L's in a day, and I let that go across my forex account and my futures account. So I'm okay with taking 3 L's on my live forex account. I'm gonna taking 3 L's on my futures account, and if I do that, then I do that. If I take them quick, you know what I'm saying? If it's on me to follow my system and focus on what I'm inputting right into me staying disciplined and to becoming a profitable trader consistently, because that's the goal, right? Yeah, so this is just a simple way to execute. Honestly, you can use it on the 5 minute, you can use it on the 15. I personally have not used it higher than that, but I have seen, even if we look on this daily, like I've seen the same type of look. You know what I'm saying? And yes, same thing is true for when it crosses above, having the account to withstand that. But if you just look at when it crossed over here, right, and probably an entry somewhere around there, that's 81 points, or 80. That's actually 1,800 pips right there. That's what that is, 1,800 pips, because that's on the daily. You know what I'm saying? So it's like, however you want to look at it, you can scale it. You can look at it on any currency. Like, oh man, I'll show you crypto. Let's see what crypto's doing. Let's look at XRP, right? So if we took this down to a lower time frame, because there's not a ton of price action, but look at this. All right, this XRP. Oh, look at that. Boom. Clean decision-making level. Wow, look how that lines up. Decision-making level. And this is actually the area when we got the break. We even got it a little bit sooner than that. Right there. Broke the low. Right? Broke the low right there. Boom. whatever the case may be, put it there, 1.5 to 1. And this is XRP. Like, I've never marked, actually, I've probably marked up XRP, but in terms of like tried to trade it, I've never done that. It's just really invested into XRP, and this is not me telling you to invest at all. So, but boom, that'd have been profit. And so the point is just how simple it is. And once you see it over and 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 over again, it'll just be easier to see, right? And then you won't like that when you first start looking at it. Yeah, you might have to really dial in on looking for it, but once you've seen it so many times, you know what it looks like for that particular look to either that you've seen happen over an amount of trades, right? To give it your edge, because that is something I identify as an edge, that we identify as an edge. Once you identify your edge, you just let that be. You just let that be. You wait for your edge to present itself. You execute. You accept the risk. You predefine your risk. You accept your risk. You predefine your profit, and you accept your profit to prevent us from getting greedy. I'm sure there'll be another time where we talk about the cloud, but this is something that I use every day in my trading. Q uses every day in his trading, and we know there's plenty others. This is not like a new type of system when it comes to what the functions of the cloud. There's just ways that I personally manipulated mine. Q manipulates his a little bit differently, in terms of what we're looking at, what indicators are selected on that cloud. But this is something that's been around long before I was around. So yeah, I'm all for historical data when we're in a space like this, and just that macro time frame and support, right? But with that being said, if any questions, comments, drop them down for us. We'll get to them. Don't forget to hit the subscribe button. That really helps out the channel. Follow me on my trading page, EHM Trades on Instagram. Follow the TikTok, all that. Facebook. We're trying to get to 100 followers on Facebook right now, so that we can start going live with the Facebook community as well. But other than that, like I said, EHM Trades. I'm out.